Good morning, everybody. It is a good morning. Hope you guys are doing good. We're going to learn about the Lightning Network. I'm going to try not to trip over this thing. I tend to move around a lot and flail my hands while I talk. This is going to get, I'm going to try to hit a little bit of kind of philosophy, like it's exactly why and how to think about the Lightning Network. Like, why does this exist? Why do we need it? And the idea of the layered approach to building network protocols. And then we're gonna get into some real nit and gritty. It's gonna be complicated. Feel free to kind of. It's gonna be difficult to squeeze this into 50 minutes. You know, Lightning Network is one of those things. When I first read the Lightning Network white paper, I had to go through it 3 or 4 times back in 2015 just to begin to see the relationship that was being built with how the transactions were designed, so to speak. And I remember kind of having a couple of aha moments and being fascinated that it was one of the things that got me as excited about the Lightning Network as I had originally when I was having my aha moment with how Bitcoin worked from kind of a network level. It was just really, really fascinating to me. And to watch it kind of build out over the last 4 years or whatever has been pretty amazing, and especially what we have coming in the next 6 months, year, 2 years. I really think we're kind of reaching the prime time of Lightning, so this is a perfect time to kind of get an understanding of how it works. But we're going to get a little technical, so if you're lost, don't feel too intimidated. This isn't necessary to use the Lightning Network. You don't need to understand any of this stuff outside of the fact that it works, and most apps are just kind of plug and play. You just boot it up and you start using it. We'll just kind of show you some of the apps and stuff that are available. Just first, by show of hands, who has a Lightning wallet and has used Lightning? Hell yeah, that is basically everybody. And if you came to this last year, this is mostly the same presentation. Like I said, there are some minor differences, but I actually go through this thing myself every couple of months because it's so easy to forget. There's just so many moving parts to this. So it'll probably be a good refresher even if you came to last year. But yeah, so I'm Guy Swann, by the way. What's up, everybody? Host of... Woo, yeah! I've read more about Bitcoin than anybody else you know. And host of Bitcoin Audible, all that jazz. And Lightning is something that I love and find super fascinating. So we are going right into it. So why Lightning? Why layers? Bitcoin doesn't scale. Bitcoin has a consensus problem, a consensus limitation, which is its actual innovation. But everybody needs to know the same state of Bitcoin. And if we don't know everything that happens on it, we can't know that we're all in the same one, that we're all playing by the same rules. The key innovation of Bitcoin is the fact that we've created a monetary network in which every single person can validate the rules for themselves from top to bottom. But that requires auditing the entire system. You know, there is no somebody can transact 100 sats somewhere, but if someone else can't check it, there's no shortcut. You can't validate the data if you can't audit the entire system. And when you're looking at something that is a digital asset that exists literally in a digital spreadsheet, everybody who is running a node, we can edit this thing on our own computer. You can just go in and you can change stuff. The question is, does everyone else accept your change? So when you can change something yourself, well, then the rules are the only thing that matter. They're the only thing, because it's the only reason Bitcoin exists in the first place, is because there are rules to define what changes are allowed and what aren't. So if you can't enforce the change, if you can't verify the change, you might as well not have a digital token at all, because you don't have anything. Again, it's just a spreadsheet. If anybody can edit it, it simply doesn't exist. It's just a CSV file on somebody's computer. So Because of that, the Bitcoin base layer is a broadcast network. It's actually a lot like how the internet originally, like ARPANET and the original like Ethernet layer of the internet works, and it's how like your local network at home works, is that you just blanket broadcast any information, messages, whatever, to the entire system. So as you see here in the diagram, is you don't know, in order to get to your destination, the intended recipient of a transaction, you don't know where this person is. They're somewhere, anywhere on the internet. So you just broadcast it out. So I just shoot a transaction to whoever I'm connected to. I'm connected to this first row here. I just send it out to everybody. Maybe I'm trying to get my transaction back to that guy. I have no idea where he is or how to get to him, so I'm just going to broadcast it out. I'm just going to say, everybody in the front row, take my transaction, look at the header. Is this for me? And you're going to say, no, it's not for me. So you're going to send it to everybody you're connected to. And we're going to do that until the entire network has the message. And then the one person, the guy in the back there, one person who sees that the header says this message is for you, gets it, and he's like, okay, good. We're solid. I got the message. But I had to send it to everybody in the whole freaking network just to find that person. Now, that's important for a consensus layer network like Bitcoin, because everybody needs to know about the transaction to know that, again, they're connected to the ledger or to the network where everybody's following the rules. Everybody needs to confirm that the transaction is valid. But when we're talking about scaling, that shit's never going to work. It kind of necessarily doesn't work. It's important for a consensus layer, but it's just like the internet. Like if your phone had to receive every single text message that anybody sent in the whole world just to eliminate the 99.99999% of them that aren't a text message to you, just so that you could pick up the one that is, obviously every phone in here would just, it's like a total DDoS to every device that has on the network. You need a unicast layer. That's why IPv4, TCP/IP was built. The original, the base layer of the internet is a broadcast network. And they would send out messages to everyone. And when you have 50 devices on the network, who cares? That's no big deal. But when you're talking about 3 billion devices, 20 billion devices, you can't do that anymore. And we have that same problem on Bitcoin. So how do we create a unicast layer? How do we create a way so that rather than blasting that message out to everybody, I can send it to you, and you just know you're going to bounce it to the lady behind you, and then she gets it to him, and I just take the route. Nobody else has to know or care about my message. I just take the route straight to its destination so that he gets the message and nobody else does. Nobody else that does not need it. So that's the philosophy. Lightning is, how do we build a unicast layer? And it's funny how Finney, actually kind of famously, he was talking in this example about Bitcoin banks, and how essentially, it can't scale. You read the quote, it says, Bitcoin itself cannot scale to have every single financial transaction in the world be broadcast to everyone and included in the blockchain. There needs to be a secondary layer of level of payment systems, which is lighter weight and more efficient. Likewise, the time needed for Bitcoin transactions to finalize will be impractical for medium to large value purchases. So what he's getting at here is the three main problems. We got, how long does it take for a confirmation? Like, we need instant payments. We need it to be more efficient so that we're not using an ungodly amount of data to make a $1 transaction, and we need it to be unicast. We need it to be lighter weight, so that it will scale. It'll scale 100x, 1,000x from what Bitcoin can accomplish. So let's get into how this thing works. What the hell is it? So Lightning is built of channels. What's a channel? So every Bitcoin transaction is just an instruction that says, here's an amount of Bitcoin, and here's a script attach to it a signature that has instructions on what can be done with that. And the general instruction is that, if I send you 1 Bitcoin, the instruction is 1 Bitcoin goes from the signature that belonged to me to the signature that now belongs to you, and unless you sign it, nobody can get it. Like it's just, the instruction is this guy owns it, basically. But there's a lot more that you can do with that script. There's a time locks, there's multi-signature. We can have it so that, 3 people have to sign, 2 of 5 people have to sign at the same time in order to unlock it. And this is all just built into the script. It's just a set of instructions. Think of it like you could write an instruction on a $100 bill and give it to somebody, and it's like, you can only spend this if you and your mom approve this transaction. But with that script, with those instructions, we're going to build something called a channel. So it's not super important that you know the technical terms, but we're going to go through them anyway. So UTXO is it's just an address, or it's just an unspent transaction output. So it's coins that have been sent somewhere on the chain, like have been sent to somebody and haven't been spent yet. So in the whole history of Bitcoin, somebody sends a transaction and then somebody spins from that location to the next thing. Like everything's just referencing the previous transaction. The UTXO set is the end of the line for every transaction that's happened. What is the valid state of Bitcoins that are usable right now versus transactions that have already happened? So UTXO, just think of UTXO as Bitcoins that can be spent. And unbroadcasted transaction, we can write transactions and we can, write multi-sig arrangements. We can do all this stuff and not broadcast it to the network. We can exchange information without having to blast it out to the Bitcoin network. And in doing so, we can actually update, our relationship. Like I could say, I'm going to broadcast this transaction tomorrow for you, and I can write it and give it to you so that if I'm not online, you can just broadcast it. But we can just wait until tomorrow. So that's unbroadcasted. It's signed, it's ready to go, but I don't have to tell anybody about it yet because maybe we haven't reached an agreement, or this is just so that you'll trust me so that we can do something today and we'll finalize or figure it out tomorrow. This is a major part of the Lightning Network. What can you do with those unbroadcasted transactions to keep a relationship untrusted or trust minimized, so to speak? CTLV, check, time lock, verify. This is a way to say that okay, I'll give you that transaction and we're going to settle it tomorrow, but if I'm not there, you can broadcast it, but it's going to be locked for 1,000 blocks. Now check time lock verify versus check sequence verify. CSV is usually referred to as relative CTLV in the sense that it's after you broadcast it, you have to wait 1,000 blocks, whereas CTLV is more like, it's not relative to when the transaction shows up, it's just like an explicit block height, or an explicit time that it's quote-unquote valid. So I would just put it out, we're on block 750,000 or something, I would just say, this is spendable at 751,000. Whereas relative would be 1,000 blocks after it gets broadcast. So he could hold it for 100,000 blocks and then broadcast it, and he would still have to wait 1,000 blocks after that. So using these two things together is actually one of the little clever tricks of Lightning. And then multi-sig, obviously, you have to have multiple people to sign it at the exact same time, or nobody gets any of the coins. And then hashes. Everybody loves hashes. We hash everything. And that is how we manage secrets. So, bidirectional channels. It's funny, Satoshi, it's really crazy how many ideas were kind of thought up in the first 6 months of Bitcoin's life, and then only realized 7 years, 10 years later. All these ideas have floated around for a long time. In fact, it was Satoshi that originally came up with the idea of channels. But there was no construction of how to do these channels such that if something went wrong, you wouldn't have to prove the entire history. So in an adversarial scenario, it basically didn't provide a scaling benefit. But luckily, Taz Dryja and Joseph Poon figured it out with Lightning Network. So bidirectional channels. The example that you hear all the time, and I still think is just a great way to think about it, is that it's a trust minimized bar tab. You know, you go into a bar tab, or you go into a bar, set up a tab. What do? You give them your credit card or your debit card or whatever, just as okay, the funds are there. And then rather than going out and swiping the card every single time you want to drink, because you're going to drink a lot, we're going to get wasted. So you're going to have 11 drinks. The hell if I'm going to swipe that thing 11 times and they're charging 25 cents and 2% every single time you do that? No, that's stupid. We're going to do that once. So I'm going to give them my card and they're going to hold on to it, and then we're just going to keep updating that as time goes on. But it's trust minimized, so to speak, with the bar. Except for the fact that they can just charge you for everything that you have, and you're just hoping they don't do that. So how do we make sure that's not a problem? How do we do an open network, open global network, where you don't know who the hell you're working with, but you don't have to trust them? So 3 main pieces of setting this up is the commitment transaction, the multi-sig, the funding, like putting up funds up front, and then the HTLC, which is used to update this as we go along, so that we can do a lot of transactions without actually having to go back to Bitcoin. So the commitment, think of the commitment as the insurance. It's, if I don't know this guy, I don't trust him, he doesn't trust me, how do we write a transaction that we can exchange beforehand so that no matter what happens in this agreement, he can leave, even if I'm not there, I don't show up, or I turn into an asshole all of a sudden, he can get out with his coins, and then vice versa. He writes me a commitment transaction that says I can get out without him, or if he turns into an asshole and tries to cheat me. So the commitment transaction is kind of like an insurance policy on the arrangement. The funding transaction is when we put the money together, we put the Bitcoin into a multi-sig address to just prove that we've got the money. You can't, I'm not going to accept an IOU from him. Like, I want to see the money on the table. So in the context of the bar tab, it would be like, it's not a debit card where you hope that there's money in the account. We've put cash on the table, and then we have locked that cash to say only if the bar says and I say that the transaction or the final settlement here is valid, does anybody get the cash. So that's obviously super important. If you don't know the Bitcoin is there, if anybody tells you that Lightning is like an IOU system and it's like fractional reserve, that's bullshit. Like, you wouldn't have liquidity limitations. It's funny, like a lot of the FUD that you hear about Lightning Network is actually contradictory, and they don't know it because they don't understand it well enough to even realize. But to say that like, oh, it has a liquidity problem because you have to like balance channels and all this shit, but then it's fractional reserve. If it was fractional reserve, why the hell would you have a liquidity problem? Why would you just invent new tokens whenever you needed liquidity? So anyway. All right, so this is where it gets fun. How are we doing on time? I want to make sure that this is going to take an... Okay, we're doing all right. So, Alice and Bob. These are absolute whales. We're going to open up... We're absolutely crazy right here. We're going to open up 10 Bitcoin channel, 10 Bitcoin on both sides here. So how do we do a commitment? How do we start this situation off? Now, we don't trust each other. Alice and Bob don't trust each other. So we're going to write an unbroadcasted transaction. We're going to write a transaction that is our protection. So let's go back to the example. We're setting up a channel. I don't trust you. So I'm going to write a transaction. You don't trust me. So I'm going to write a transaction that makes it so that I can get out of the agreement without you being around. I'm not going to enter this situation unless I know I have an exit, right? Because, hell, you might have a heart attack 2 seconds after we set up this arrangement, and then I'm screwed. So the first thing we need to do is get an exit plan. So I write a transaction that says, I'm going to send my 10 Bitcoin, holy Jesus, this is a big channel. Then I send my 10 Bitcoin back to me immediately. And then Bob's Bitcoin, your Bitcoin, is sent to a multi-sig address that has 1,000 block wait time. And this is a relative wait time. So this is after it's broadcast to the chain, you have to wait 1,000 blocks. And that's important that it's relative, because he could secretly wait 1,000 blocks if it was one of the absolute time locks, where if it's just in 1,000 blocks it's valid. But because it's relative, he has to broadcast it, and it has to get put into the network, which means that I see it. If I'm running a node, he cannot hide that transaction from me. So I've got 1,000 blocks in order to contest whether or not what he posted to the chain was true. So that's my insurance. And then I write that transaction for my exit, and I give it to him. Then he does the exact same thing. He doesn't trust me either. So he writes the transaction for his exit and gives it to me. All right, we're off to a good start. We know we can exit this thing. Nobody's broadcast anything. Nobody's talked to the Bitcoin chain. We're just private conversation. Now, we need a multi-sig address. There's 3 branches here in the Lightning channel. There's okay, so we want to close this out. We've done some transactions in it. We want to close it out. We both agree on how to close it. Everything's cool. All right, we can leave. You sign it, I sign it, we leave. We're good. In fact, you don't even have to show the other branches at that point, because all it is just a 2 of 2 multi-sig. So you just both of us sign it, and then we get the coins that we agreed upon. The other is the time lock, the insurance clause. So this is he has to wait 1,000 blocks if I'm not around. And then the third is the revocation. Wait. Hold on a second. Okay. The mutual, the one by yourself, and then the insurance. Okay, yeah. Sorry. I told you this is complicated. So the mutual is always there. The I can do it by myself, I just have to wait is always there. But then there's the third. There's the insurance clause with the individual payment secret. And that's the one that says if it's broadcast without me, and if someone's trying to cheat, somebody's trying to broadcast an old state, because we're going to update this a lot, right? We're going to do 10 transactions, 50 transactions, 100 transactions. So if somebody is broadcasting, if we're on transaction 100 and he broadcasts transaction 50, I need a way to prove that he's on transaction 50 and that is not valid. That's not right. That's the third branch. It requires 3 things: Bob's signature, or Alice's signature, and Alice's secret. And we are actually holding separate asymmetric ones. So the one that he's holding requires my signature and my payment secret, as well as his signature. And then mine is the exact opposite. The one I'm holding requires his secret, his signature, and my signature. So 3 things. And the secret is the thing that we're going to hold in wait in order to kind of use it as leverage so that we can continue updating this thing. And we know essentially that neither party can revoke the previous transaction. So how well are we holding up? Doing okay? Okay? Okay. But I'm getting a second chance to kind of explain here how we break this down. So now we need to update this. So when okay. So we're going to secret number 2. So secret number 1 is just how we start this thing out. So there are 2 things that his transaction does not have. It's my secret and my signature. And I don't want him to have both of those things, because that means that he can broadcast without me there and take, this is the key, he can take everything in the multisig. That's the point of the secret. So he doesn't just take his coins. If he has my secret and my signature, then he can take the entire multisig address. He can empty the entire thing. That's the insurance clause. If I try to cheat, he gets everything in the address. So he gets, even though I own 10, he owns 10, he's going to get 20 if I revoke or if I try to cheat a previous state of this channel. Otherwise, as long as everybody's honest, we're good. We're good. We can keep going forward. We can keep bouncing this Bitcoin back and forth between us. And we can update in either direction. So here's Alice and Bob, cute people. Alice, so in this situation we're trying to update. Alice wants to send 1 Bitcoin to Bob. We're 10 and 10. Alice updates by writing a new commitment. So we're updating our insurance clause. Now 9 Bitcoin is going to go to Alice. And again, she's writing her own transaction that she wants to give to Bob so that I'm Alice in this situation. Gender neutral, guys. So I'm writing this transaction in order to make Bob trust me, right? So 9 Bitcoin goes, God bless. I'm writing it because I don't trust Bob. 9 Bitcoin goes directly to my own address so that if he tries to leave, he has to pay me. And 11 goes to the multisig where Bob can unlock it after 1,000 blocks. Or the fun transaction, Alice can unlock it herself with Bob's secret and Bob's signature. But she's not going to get Bob's signature unless Bob actually broadcasts it. So we've updated to secret number 2. We've written a new commitment with a new payment secret, and I have written the one and given it to Bob. Bob has written the one for me and given it to me. But the secret sauce is that we exchange secret number 1. We exchange one of the critical keys to the first commitment. So I said it needed 3 things, right? It needs Bob's signature, Alice's signature, and the secret key. Well, if I broadcast it, it has Alice's signature. If Bob broadcasts it, it's got Bob's signature. But nobody has the secret key, right? And this is asymmetric. So he doesn't have my signature, and Bob doesn't have, or I don't have Bob's. But if we exchange secret number 1 in this arrangement, when we update it to secret number 2, then that means that if I sign and broadcast the first commitment transaction, which would be very beneficial to me as Alice, because I now have a commitment transaction that says I own 9 Bitcoin. I still have one that says I own 10 Bitcoin, but it's the last one. Well, how does Bob know that I'm not going to broadcast that one? Well, because I gave him my secret. I gave him the secret to that one. So originally he needed 2 things. I gave him my secret. Now all he needs is 1 thing, my signature. So I'm hanging on to it. What do I do if I broadcast it? I have to sign it. So if I do that without Bob's signature, what do I get? 1,000 block wait time. The secret and my signature. He has everything he needs for those 1,000 blocks to take my 9 Bitcoin. Why? Because I lied and said I had 10. Yes, sir.
I'm a little confused on the difference between the secrets and the signatures.
Okay.
So the secret is a smart contract and the signature is a private key?
We have the main private key for the multisig, and then we're just basically creating another key on the fly every time we make a payment. So think of it just as like another multisig, like another piece of the multisig. It's just individual to either one of us. So we have the normal multisig where he just has his base private key and I have my base private key. But when we make a payment, we just update it. We just generate another. It's referred to as a pre-image, secret, whatever. But it's basically
a derivation of the original key, kind of like the
essentially.
Derivations?
Yeah, essentially. But it's just a hash specific to that one payment. So as soon as that payment is passed, it's only used in the case that somebody cheats, but it's not like built into the multi-sig where like forever, like that one secret, it refers only to that single commitment transaction, and then we're updating it every single time. So think of it like we're just throwing in a brand new key every single time we do these transactions, and he has a particular one and I have a particular one for every single payment. But yeah, secret and signature, they're in essence the same thing. They serve the same purpose. One of them's just already on chain. It's a requirement that's already on chain to move the multi-sig, and the other one is just one that we're updating privately between each other. So it never actually sees the chain unless something goes wrong. Purely used in an adversarial situation.
So a signature can be stored on a hardware device, but a secret cannot be stored on a hardware device, correct?
Yeah, you wouldn't be able to, like you would still need the signature in order to, like if you were doing it with a hardware device, you could make it so that you would have to plug in like a hardware wallet to update your channel, but you wouldn't be able to do it on the fly. So the pre-images are typically generated on the hot wallet side. All right, so yeah, so that's the thing, is that it's like we're, we have a gun. I've written a gun for him, and I've given it to him so that he can point it at me. And the secret is loading the gun. So when I give him the secret to the previous transactions, it's loading the gun that he can shoot me with if I sign it. So what we end up with is the reason Lightning is trust minimized, or maybe the better simple scenario or simple wording is non-custodial, is that I am not giving him my coins. It is not a situation where I have to trust him completely in order to get my coins. He could die, he could go away, he could lose internet connection, and I can get my coins. And the reason is, and I also know that he's not going to cheat me, because essentially the arrangement that's built in the Lightning channel is a Mexican standoff. Like, what we're doing is that I'm giving him a gun and loading it, and saying that only if I exchange the bullet or whatever, then am I at risk. And I'm trusting him. I'm saying I'm going to give you this loaded gun so that if I try to walk backward in time, you can pull the trigger. And because of that, all we can do is move forward, because moving backward is insanely costly, and Bitcoin doesn't care. Bitcoin doesn't know what's going on. All Bitcoin is going to do is fulfill the hashes, right? So if he broadcasts that old one, there ain't shit I can do. Bitcoin does not care. Bitcoin sees that he has my signature and my secret, and I don't have any coins anymore. So in this sense, Bitcoin basically becomes, we create a live contract that we can keep updating back and forth. We can just bounce this 20 Bitcoin balance like crazy people back and forth all day long. And Bitcoin acts like a court. So this creates a channel, this creates an arrangement where we can make payments all day long. And we can do them small, we can do them large. And what does it do? It fulfills Hal Finney's 3 problems, right? It's lightweight. We don't have to broadcast this out to anybody else. I'm just sending it directly back and forth between him and me. It's efficient. Nobody has to store this stuff. We can do this all day long. We can do this for a month. We can do this for a year. We can do this for 10 years. Leave this arrangement open and we can keep sending transactions back and forth if we're going to do business together that long. And no new data is broadcasted to the chain. We are, as long as we are all connected to the Bitcoin network and we can watch for that one transaction that has to wait 1,000 blocks, we can always enforce the fact that we can always enforce the rightful owner. Bitcoin becomes a court. The Lightning channel becomes a payments liquidity arrangement. It is a liquidity network, and Bitcoin becomes the decentralized, global, completely incorruptible financial court for settling of payments. And in doing so, you have I did the math on it one day. It was kind of like back of the napkin math for like the number of channels that I have. I mean, I play with all the tools and stuff, so this might actually be not as exaggerated as it could be, because I am actually constantly opening and closing channels because I have all the apps and all the things. But Just in like the last little math I did, Lightning is essentially a 50 to 60x scaling for just my footprint. Like I do for every time I am closing or opening one channel, which is being broadcast to the chain, I am doing about 50 Lightning payments. And I've been trying to figure out how, like a lot of different ways to make use of it. It's really interesting when you can send money very quickly, like what you can kind of come up with, and ways that you can use it. Like I've been trying to get off of Twitter because it's a time suck and it will eat your life, and doom scrolling is not good for your mental health. So I've been trying to figure out how to like use Twitter effectively, and one of my big problems is like for Bitcoin Audible is that's a big way that I source my articles. People share stuff out, like, you know, everybody I follow post articles. But when I go over there, like it's like, oh, okay, let me check for some articles. Notifications, yes. Oh, some idiot said something stupid on the internet and I have to fix it. Okay, 3 hours later. So how do I get around that? Like, so like in the Audionauts group, I've been trying to like offer, like if you share articles that you read and that like you were interested in, or you just wanted to hear, I'll pay you 21,000 sats if I like it and end up doing it on the show. For trying to figure stuff out, like I've done this like a handful of times. It's like I see some crazy story or some conspiracy that something happened, and I'm like, all right, well, what's the source on this? I'll pay some money, 10,000 sats, 5,000 sats or whatever. If you can give me information that I can't find otherwise, and I don't have to go 30, 45 minutes looking for like validity to this story or not. I'll get people posting both sides of the story, and like I can just scan through the comments a little bit if I actually want to learn something about it, and I toss everybody $1. So there's like a lot of like really exciting and like kind of fun little things that you can actually use it to, like that's worth my time, right? Like if I could save myself an hour on Twitter and it costs me $3 and I figure out what I actually wanted to know about some situation, or I get like an article, that's totally worth my time. My time's worth way more than $3 an hour. I wouldn't do shit for $3 an hour. So it opens up a lot of like really fascinating possibility. But we have only covered a single channel. We didn't connect it anywhere. Like I just have one 20 Bitcoin channel because we're just buying houses from each other all day long. I don't even know. But we need to connect to a network. We need to branch this out. We need a unicast network on top of Bitcoin, right? It doesn't work if it's just one-to-one. So how do we connect these things together? This is where the real magic happens. And this is such a fun. This was such a cool thing to like finally wrap my head around. So now, in this situation, we have 5 participants: Alice, Bob, Carol, Diana, and Eric. And everybody has channels. I want to pay Eric. I'm Alice again. I want to pay Eric. How do I do this without a channel to Eric? How do I make it so that I can use each one of these channels along the path in order to bridge them together? Now, I can pay Bob. If everybody's got like a big ass channels like us, I can send a Bitcoin to Bob. Bob can send one to Carol. Carol can send one to Diana. Diana can send one to Eric. Boom, we're good. Nobody here is. Everybody has the same amount of Bitcoin they had, except for me, Alice, and Eric. Eric has 1 extra Bitcoin. I have 1 less. And in the context, obviously, of the Lightning Network, I'm going to write this thing such that we can update it and like take a tiny little fee along the way. So I'll pay Bob 2 cents to do this, and Carol and Diana. So it'll cost me like 5 cents, 6 cents, whatever, to get it to its destination. Because Bitcoin's a lot, you know, there should be like a little bit of a fee. It's funny, there's actually a large portion of the network that doesn't charge any fee. But I expect that to change just because, I don't know, there's actually an interesting dynamic here because the way the liquidity built out, like some people, like there's such a growing an increasingly robust market for just buying liquidity outright, that you should literally just pay somebody 30,000 sats for like X amount of Bitcoin for a month in a channel. The best routing experience that you have on the network is zero fee routing. So it might be really interesting to see, like, I don't think we can confidently say either direction how the monetization of the Lightning Network works out, because it may mostly just be in liquidity management, and individual payment fees may be less of a thing, because basically we're paying to just have people so that we can like sell services. But anyway, there's a lot to unpack there. There's some really fascinating things about like how like congestion and stuff, particularly on the Bitcoin base layer, you know, will raise fees, and it will bring new entrants into the market. But then you're also looking at like there's actual liquidity markets that just say this is how much I'll pay directly for liquidity. So it's interesting. But this enables us to turn this thing into a network rather than just a single individual arrangement. How do we do that? How do we make sure that Bob, Carol, and Diana cannot take that 1 Bitcoin? Because I can send it to Bob and say send it to Eric, and he's like, okay, and he just leaves. We certainly don't want that to happen. We want the same arrangement with Bob, Carol, and Diana as we originally had with Bob. Nobody can cheat. They get exactly what I allocate to them. And that Eric is essentially the only one that can take it. And that if it doesn't make it all the way to Eric, it just doesn't work. It either completes from start to finish, or it just fails. There's no middle ground. There's no, it got stuck at Carol. So, Alice wants to pay 1 Bitcoin to Eric. She talks to Eric first. We connect, just do a normal internet handshake. I just say, this is what we're going to do. I'm going to get a hash of your secret. So again, it's just a private key. It's just what is required to unlock the payment, and Eric's not going to share it with anybody because we don't want anybody else to have the payment. So we've just got a key for this individual payment. That hash is given to Alice, is given to myself, and now I can lock the transfer of this to Bob such that it can only be unlocked with the private key. I don't have the private key. It's like a private and public key, right? Like you give somebody your public key, and that way they can lock a message, they can lock a payment, whatever it is, to you, and you're the only one who can unlock it because you have the secret. So I put Eric's lock on that transaction as it moves to Bob. Bob puts Eric's lock on it as it moves to Carol, Carol to Diana, Diana to Eric. Now, when we do that, what we're doing is we're writing another commitment transaction, except rather than updating one with just your address or my address, like Bob or Alice's address, it actually sends it to another multi-sig address, which has Eric's secret. So only if Eric shares his secret does anybody get this, or it time locks out, or it goes back. So if nothing happens, everybody just goes back to 0. So we've got a 1 day, and not relative, but like a 1 day time lock on this payment, which sometimes is like an hour or something. It's basically user selected, but there's a baseline. I think like the standard on the network right now is 1 day, if I'm not mistaken. Now Bob writes this same setup for Carol, and again, all of this, the new piece of this is that the multi-signature cannot be redeemed without Eric's secret. So this is just kind of the diagram of what we've broken out here. So it's the same secret, and there's also it's actually interesting that this is one of the quote-unquote privacy limitations of Lightning. So from a privacy standpoint, Lightning is fascinating. There's way more private capabilities on Lightning because Carol doesn't actually know where this payment's coming from. Neither does Diana. In fact, technically neither does Bob. If Alice has another channel from somewhere, It's onion routed. So it's like opening up, it's like envelopes inside of envelopes, and all you can see is the last address and the next address, and you have no idea how big the stack of envelopes is. So you open it up and you just see the next location. So like I would send a thing to you, and then it just said you open up the one, and you know it's from me, and then you open up that envelope and you've got the next address on it, and you send it to her right behind you. But you actually don't know if I opened up another envelope from back here. And then she opens it. You don't know if there's another envelope inside of it. So she doesn't know, I mean, you don't know if she's the destination or if she's one in the next 7 hops of this thing. Nobody really knows where it starts or where it ends. Now, however, if I, or Bob, has this node and actually this node, well, the one thing that does tie these things together is the secret. So he can put 2 and 2 together that it went from Bob to Carol back to him on a different node. So there's like a degree of like, okay, I can parse out that this transaction made it through these nodes specifically. But again, still doesn't know Eric is the destination. Or technically that Alice is the originator. But there's actually a new trick. This is going to be a little bit outdated, the HTLC, because there's something called PTLC, which actually makes it so it's unlocked with the exact same secret at every step, but the secret is updated, is essentially personalized to each individual channel. And because of that, you can't actually tie these things together. You can see that the similar payment went through, but you can't know for certain that it's the exact same one because it is the same private key that unlocks it, but the hash is individual to each channel. So that's a cool little trick. Yes?
So during the initialization phase,
yeah.
How does Alice know that Bob is the right channel to reach her effectively, or how does Bob know that Carol is?
Yes. So what we do is there's something called the gossip network, but it basically does the same job that your router does at home and like routing does basically on the basic internet, is you build a table. You build a routing table and you're constantly broadcasting out rather than saying, I need a record of every single transaction ever on the network. Instead, it's broadcasting out to the network and saying, I need to know where channels are and I need to know where nodes are. And a lot of the information is actually based on Eric's invoice. So when Eric sends the hash to Alice, it also usually comes with like channel hints. It comes with, this is my node, and this is my public key. You know, that's like public on the channel. Like you can go to Amboss or 1ML or any of these like Lightning visualizers, and you can just go through and you can look at channel balances or rough channel balances, and like all the nodes. Like you can count the nodes on the network. Now there are a lot of private channels and private nodes. And so I think the last decent estimate that I heard was that like 1/3 of the network is actually private right now. Or well, that was probably a year and a half old now. So I have no idea what it is these days. There are a couple people that I know are trying to figure out how to see as much as they can of private channels and private nodes. So we might actually get a decent estimate here in the near future. But essentially, these are nodes that are saying, like, I want to be on the Lightning Network and I want to be connected to it, but I don't want to be routing shit for people. Like, I don't want people sending payments through me. I just want to do my payments. I'm stingy, or I'm not going to be online all the time. I'm not going to be reliable. Please just don't send me payments to the public network. Yes.
So is it Alice's responsibility to compute like the shortest path weighted by the fees in order to find the best route?
That if she's doing this fully, like self-sovereign, non-custodially, yes, she would want to be the one. Routing is done for. Oh man, I totally forgot. The question is, does Alice figure out the route? And that is correct. In the most self-sovereign setup, Alice wants to be able to have a table of the entire Lightning Network so that she is the one figuring out how to get to the destination. But there's actually a lot, like let's say Alice is on mobile and she wants to get the convenience and the self-custodial aspect of Lightning, but she doesn't want to have to use a crap ton of RAM on her iPhone to hold a routing table and figure out where all the nodes and channels are. So she offloads that service. She can actually use, let's say Bob is a LSP, is a Lightning Service Provider. They're Breeze node or Async or something like that. Is that she can actually give the payment to them, still non-custodially, hold your own keys and everything, but just let them figure out how to get to the destination. Now it's a privacy concern, like Bob will know where the transaction is going at this point, but this is called a rendezvous routing. Obviously that would be a much better user experience if that wasn't really your concern for this payment or this wallet or whatever you want to say. Yeah.
You like run Lightning on your Umbrel and then on your phone just tell that what to do, kind of like a proxy?
Yes. So the question is, like, if you're running Lightning on Umbrel and then you're connecting your mobile wallet, is in that situation you would be leaning on, or you could set up your own rendezvous routing setup on your Umbrel so that your Umbrel does all the heavy lifting, and your mobile wallet just asks Umbrel to find a route to the destination. Well, actually, I guess if you're connecting your wallet, you're just using your Umbrel wallet. You don't have a channel with your Umbrel. You're just connecting directly to it. Yeah. But yeah, you pay a small fee along the route, and you get it to Eric. And Eric is the one with the secret. Eric's the one who can satisfy this hash. So what happens? We're going to focus on Bob here for a second to understand how this, what happens if Bob tries to transmit this transaction before it's being redeemed, because he wants that 1 Bitcoin, he doesn't want to give it up, right? So in the commitment transaction that they set up, in the insurance clause that they have together, the new candidate, or the new piece of this thing, is Eric's secret. So in that branch, Alice gets her 9 Bitcoin immediately. Bob, because he's by himself and nobody else signed with him, has to wait 1,000 blocks for his. And this is basically going to court and saying, I want this exit to the Bitcoin transaction. It says, okay, well, you have 1,000 days that Alice is going to contest it, or somebody else is going to contest this transaction. And that's for his 10 Bitcoin. But Bob will have to wait another day because of the HTLC, the payment that's going through, for the balance that belongs to Eric. So that 1 Bitcoin, so we've got 20 Bitcoin, right? 9 goes to Alice, 10 goes to Bob, and then the payment hanging in the wind, is sent to a multi-sig where there's a whole nother day wait based on Eric's secret. So in this sense, it's really stupid to cheat. It's got the same situation as with just directly with me and Bob, except that now Eric can jump in and redeem, and he sees this. As soon as Eric redeems, so here's kind of like what's interesting. I'm not sure if, and I also love this, I think this was on purpose, but have you ever heard that lightning doesn't actually go from the cloud to the ground, but it actually sets up, and then the lightning itself actually travels from the ground up? Like it's basically sets up like a charge, like when things just kind of line up, it essentially finds a path, and then the actual traveling is in the other direction. This is the same thing that happens with keys in Lightning Network, is you set up a path from the beginning to the end, and then the strike, the sharing of the secret, happens from the end back to the beginning. It cascades back to where this whole thing started. So when Eric, if we're broadcasting this transaction, Eric broadcasts it, but because it's not, this is the one unique thing about the secret that's exchanged that's different from a signature, is that the secret has to be shared in totality. In totality. That's why we don't reuse it, because in order for him to access it, rather than like signing with a secret key, he has to post his secret. He has to write it visibly in the transaction and then send it to the chain. So what that means is that the only way for Eric to get his coins, if he's actually broadcasting this to Bitcoin rather than just staying on Lightning, the only way for him to actually unlock it is to publicly broadcast the very secret that Diana needs to unlock it. So he can't get away with taking his 1 Bitcoin without giving the information necessary for Diana to take hers. And then if Diana posted to chain, she can't take it from her channel without publicly posting on the blockchain the thing that Carol needs to get her Bitcoin redeemed. So nobody can steal it from the next person in the line without revealing the very information they need to make sure that they get the Bitcoin in their channel. And that goes all the way back to Alice. But because of that, nobody wants to broadcast, right? It doesn't matter. So what we do is Eric just exchanges the secret with Diana. We don't want to broadcast it. I want to keep the channel open. So Eric just gives the secret to Diana. Diana gives the secret to Carol. Carol to Bob. Bob to Alice. And boom, everybody updates. And we've moved 1 Bitcoin across 5 participants to pay a single person. And we didn't have to trust anybody along the way. And in doing so, we have a network. This is my favorite visualization of the Lightning Network. And unfortunately, the website is no longer there. So this is like a year old. But these are, I told you asked, like, how does Alice know the route? Is she builds, a Lightning node will build a map. It will ping out where are all the nodes, where are all the channels. And this, as of July of last year, is what the Lightning Network looked like. Those are all the channels. And this is the public side. So, maybe an additional 25, 30% or whatever is not visible on this. But every one of those lines is a channel with a certain Bitcoin balance. And every one of those peaks you see is another node on the network. And in doing so, this guy over here can bounce it through the network like a unicast network, broadcast nothing to the Bitcoin blockchain, and pay this guy way the hell over here. And now we have a global, no jurisdiction, no, trust minimized, non-custodial payments network. It's totally open. Anybody the cost of creating new infrastructure and creating new liquidity in this network at any location and to any location is a Bitcoin transaction, which is what, 10 cents right now. It might get more, but we hope it'll get more because this thing's growing. This thing's growing a lot. In fact, that's actually one of the really cool things is that even through the bear market, liquidity just keeps going up. And a lot has happened in that context, since El Salvador basically, made it part of their internal banking infrastructure. And I really feel like probably in the last 2 years, it kind of reached that point of, because this is a liquidity network, like it takes a lot of momentum. It takes a lot of building. When there's like 10 nodes on the network and 15 channels or something, the likelihood of you being able to find a path with enough liquidity for your payment is very, very small. It's a pain in the ass, right? It's just like normal internet or whatever. There's a lot of bootstrapping because you have to really establish essentially this base for where all the liquidity is and where it's allocated. But the funny thing is that the bigger it gets, the better it works. The more liquidity and the more channels and the more nodes, the more likely it is that you can just connect to somebody, send a payment to anybody else anywhere on the network, and it just arrives. And that's kind of how you want scaling to happen, and particularly because the explicit limitation is that the Bitcoin has to actually exist. You can't fake the Bitcoin in the network because obviously nobody's going to accept a transaction. Like I don't trust Bob or whatever. I'm not going to accept a transaction from him that says I get 2 Bitcoin that doesn't exist anywhere, and he doesn't have validity to sign it. I'd be an idiot. I'd be the one who screwed myself out of Bitcoin, not him. And it wouldn't be his fault. But in that context, you hear the FUD is Lightning and IOU. No. But if you wanted to describe it as an IOU, You technically could, because I hold a transaction that is enforceable, but I haven't broadcast it yet. I don't have my Bitcoin. I have a contract that says I'm definitely going to be able to get it, but I don't want to take it yet. I don't need it yet. I want a payment network. I want to send fast, instant, cheap payments. So what is it if it's not an IOU? It's a mutually agreed multi-sig contract where both parties have to agree, and that agreement cannot be changed, and nobody can unilaterally change it. Both parties have to be there. There is a confirmed proof of reserves already on the table. The cash is on the table. Everybody knows exactly how much is there. And that's already on chain, so that can't be altered or cheated. There's a waiting period if only one party tries to withdraw from that. So if anybody becomes unresponsive, the other party can exit by themselves. They just have to wait 1,000 blocks. And then there's an insurance policy that if either party attempts to double spend a previous transaction, one that we've already revealed to each other the secret of, well, then there's a punishment clause that allows the victim to steal all of the cheater's funds. So imagine if you had that relationship with your bank. I wouldn't call that I would not describe that as an IOU. I would describe that as a fuck you, bank, if you try to do anything to me and I own my coins, right? And that's why we don't need banks. That's why we don't need trusted institutions to do this with. I can just do it with a random person because it doesn't really matter. The only trust really that I'm putting into this situation is that he stays online. Like really, like my one big indicator is uptime. I want him to be around so that I can send payments through his node. So IOU is not a very enlightened term, but I guess you could make an argument that to some degree it's an IOU. But it's fractional reserve. No, it's not. Shut the fuck up. Okay. So this is really cool. And I love like how much like the red line here, or orange line, or red, I don't know, somewhere in between. That is the amount of Bitcoin on the Lightning Network. So during 2018 when this launched, everybody got reckless and had a lot of fun, and we just put tons of nodes and tons of channels and stuff on the network. And then it turns out, oh my god, this thing's really small, and there's like very, very little endpoint adoption, and there's channel limits because we don't want everybody to lose all their money, and we still don't really know, working out a lot of kinks, so it flattens out. And we're sorting out all the problems. We're trying to figure out how to implement this thing, open nodes coming online, bit refills, accepting it, all this stuff. And then 2021 comes along, and we kind of reach that turning point in momentum, and suddenly we've worked out enough of the kinks that Lightning just kind of starts working. And the beautiful thing, the thing I really wanted to point out, is that the blue line is the dollar balance, like how much is this worth? So through this bear market, it's not really that bad if you've been Bitcoin for a long time, but this really bad bear market where the dollar value has gone down, Lightning has still just done nothing but grow. Lightning is just on the move. It's one of my favorite fundamentals to look at. Yo, what's up, boss?
Like 10 minutes over.
Holy crap!
Time has come.
Oh, we need a timer. Lots of fun stuff. Check it out. That's basically the end of it. We got it. All right. Well, we got voltage is coming in right now, right? We good? Okay.